This is Craig Haugard with your Financial Issues Egg update for May 6th. Corn saw most months make new contract highs yesterday. The twist was that the deferred months outperformed the old crop months as we saw December 21 futures close above $6 for the first time. We had a little negative news in the market with the announcement that China had canceled the sale of 140,000 metric tons of corn. But on the other hand, the USDA announced that we'd made a new crop sale of 184,000 metric tons to Mexico. The weekly ethanol production showed a week-over-week increase of 7,000 barrels per day to give us the highest weekly production numbers that we've seen in the past 4 weeks. We did see evidence that the high prices are starting to cause some product substitution as trains of wheat traded into the southeast feed market, displacing corn in those feed rations. Soybean prices were higher once again, as was the case with corn. The new crop bean futures outperformed the old crop. The bean market lacked any real fresh news yesterday, although we did have another analyst raise the size of the Brazilian crop. Datgro raised their estimate of the Brazilian crop by 800,000 metric tons, up to 136.3 million. Wheat had double-digit gains in all three classes, and we also had Paris milling wheat futures higher as well. As I mentioned in my corn comments, we're seeing wheat work more and more as a feed ingredient. That has been the case in the Southwest for some time now, and now in the Southeast, we are seeing some opportunity for wheat to work in feed rations as well. That's obviously all very positive for demand. We're seeing that internationally as well. For example, milling wheat in Ukraine is currently at a $15 per metric ton discount to FOB corn in that country. From a weather perspective, it looks like the southern plains and upper plains should get some moisture in the next 15 days. Hard red spring wheat areas are currently the driest and may only have about 50% coverage based on the current forecast, so you would expect the Minneapolis futures to be the prime candidate for a weather-related rally should one continue to occur. Cotton futures inched higher yesterday, with July futures closing 16 points higher, settling at 87.33. And livestock futures were higher straight across the board. At the close, June live cattle were $1.40 higher, while August feeder cattle were up $2.05 at the closing bell. Lean hog futures had another higher close, with the June futures finishing 87.5 cents higher and establishing yet another life of contract high. Class 3 milk futures remained confined to a pretty tight trading range. At the close, the May futures were 8 points higher, settling at 19.15. And meat cutout values just keep charging higher. Choice box beef was up $3.56, closing at $304.78. Select boxes were $2.27 higher as they settled at $286.18. Pork carcass cutout values were a bit stronger as well, finishing 73 cents higher as they settled the day at $111.91 per hundredweight. This has been Craig Haugard with your Financial Issues Egg update. We'll be right back with more financial issues after this.